only get stuck in one aspect, only keep on planning and don't take any action, then it's an absolute waste of time, effort, energy, and obviously money, which is your opportunity cost in this. So I believe I am in between the right set of people who are not just planners but are also action takers, right? So let's get started with today's agenda. So what are the things we'll be discussing today? The first one is we'll be learning what MLD is. What is MLD? Market linked debentures. How is it that an MLD can help us make 11% returns from our debt investments? We'll be talking about one such aspect. We'll be talking about the corporate FDs versus short term bonds versus standard FDs in the bank. We'll be talking about how we can choose to park our money in different instruments depending on risk, return, and taxation. The third thing, something very big, is the Evergrande crisis and how it affects us. How many of you have heard about the Evergrande crisis, by the way? Any of you heard about the Evergrande crisis? Okay. All right. So, in case you have not, if you don't know enough about it, we'll be going into more depths in this aspect. Then we'll be talking about, so a little improvisation I've done in the financial goal tracker. So something that will help you to calculate your progress as well, something that was not there before. We'll be talking about how to legally evade capital income tax. This is something uh, companies use not in the context of capital income but other income. We'll be taking the case study of Amazon today and how they've been able to do it. And using the same psychology but not the skills, we'll use the skills of India to ensure that we legally don't pay any capital gain tax on that, or if not eliminate, definitely be able to reduce it, but legally. And then we'll be talking about where the foreign portfolios are investing their money in this, and a lot more is coming your way. But before we start today's session, let's do a quick revision. So, what did we learn in the last class? We started off by how we can buy the US stocks from your own demat account with absolute safety. So, there's been a lot of buzz about investing in the US markets, right? Because the US markets were doing very well until now, the Indian markets are doing even better than that. But there was a period when the US markets were doing better than India. And this is not very long ago, I think 6 months or so. And people wanted to invest more in the US markets. So we've seen there are ETFs, there are mutual funds where you can invest in US markets. Then came the stocks where you can open an offshore account and invest in US markets. And then finally came the option of, now what we're talking about is from your own demat account, you can buy US ETFs, you can buy US mutual stocks, mutual funds you anyways were able to buy in the past as well. The main factor here is safety, because this is your demat account following Indian jurisdiction, which means that your money is safe and secure. So how is that possible? Using the NSE IFSC. IFSC is the in the gift city, they have started another financial hub and center which bridges the gap between the London Stock Exchange and the Singapore Stock Exchange. So this is the international stock exchange of India. So the good part about it is you can have fractional ownership of stocks. You don't have to buy Amazon stock, let's say for $1,000. You don't have to buy for $1,000. You can buy for $1 or $10 as well. The safety is guaranteed, and but the LRS will apply. LRS is standing for the remittance scheme, the liberalized remittance scheme, which means you cannot invest more than $250,000 per year. Okay, which is I think good enough to get started at least. Then we'll be talking, we spoke about how to get 90 days interest free period on your credit card. I don't know if you're using this option or not, but we spoke about Slice, the credit card company, who's come up with a game changer credit card which has zero charges. So you don't have to pay for getting the card. You don't have to pay any annual fees. You don't have to pay any interest for up to 3 months, 90 days. A standard credit card, do you know how many days of credit do you get on a standard credit card? How many days? If you know the answer, can you tell me in the comments? How many days do you get a interest-free period on a standard credit card? The answer is 30 days, 40. No idea? 50 days. Up to 50 days. 48 to 50 days is the period, that is full period that you get from the standard credit card. So this one goes up to 90. So I'm definitely using it, although I haven't used this certain feature of rolling till 90, but I'm certainly having that option is a good peace of mind, especially when your cash flows are not very well. So we also spoke about in the last class the new fund offer of HDFC Nifty 50 equal weight index. We spoke about why this is not the right approach, the right strategy of investing. So I won't go in much detail. You should visit the last class in case you haven't attended it live. We also spoke about how to review your ITR and reduce taxes and filing mistakes. Although this is something I would request you to do this activity with your chartered accountants, but we spoke about one very common and major mistake people do, which was Section 234 ABC, which is not paying your advance tax on time. And we spoke about different case studies where people have been paying a lot of taxes. In fact, you'll be very amazed, for the people that I work on one, I have now found almost 50% of them were paying uh, interest and penalties on 234 ABC. The maximum one person was paying was almost, I think, 5 or 6 lakhs per annum only in this, in all the files in the family. The minimum that I've found is, I think, about 40, 50,000. So I think it was not as specific as I initially thought. I think it's more common. So that's something we all should ensure that doesn't happen with us. We also spoke about how to safeguard our bank lockers in the last class. The new regulation that has come in, how you can sign in new contracts. And I think from 2022, your bank lockers will be um, covered for 100 times of the fees that you are paying. So if you're paying 10,000 fees, so 10,000 ka times 10 is 1 lakh and times 100 is 10 lakh rupees. So 10 lakhs ka cover on a 10,000 rupees fees that you're paying to the bank locker. So it's limited, but still something is better than nothing. Then this was one of my favorites, one of my absolute favorites from the last class. We spoke about how we can legally reduce our taxes using HRA and NPS. Again, we've applied this for a few of our students, and they've been able to save a few lakh rupees every year, few lakhs every year, just by using one of the method, and that was HRA. So in HRA, you are able to save 30% tax. So the whole idea was that if I am living, I'll tell you my example as well. I'm living in my father's house, right? So it's a independent bungalow. My father lives, my parents live on the ground floor, and although the house is one in one, but on the first floor we have our own area. So my office is also on the first floor, which means I'm liable to pay my father rent for my business, and for my room or my floor, I'm liable to pay him rent for home accommodation. So I'm able to, let's say, give him 50,000 rupees every month. This same 50,000 rupees every month I have to pay full taxes on, but now that will get compensated as an expense in my file, but the same money will go to my father's file. But hold on, that isn't that just transfer of taxes? No, because when my father receives the same taxes, he will use the standard deduction and not pay tax on the 30% of the entire 100 rupees or whatever money that he receives. So this way, within the family, you're able to reduce your tax liability. The only way this applies is when you are living with your parents or living in a house that your family owns, or any arrangement that you can make on these lines. Again, using a chartered accountant here would be the best way of ensuring you don't do any. You are able to do this legally. That's the main bottom line. In the whole idea is not to just to save taxes and later have a scrutiny. Just do this in the way that it does not come in the eyes of the taxman. We also learned the changes that have happened in NPS. Now they would allow tax-free withdrawals. One, in case your total amount is less than 5 lakhs. And in case it is more than 5 lakhs, then it's the same old rules will apply, that 60% of your money will have to compulsorily stay invested. So NPS is only valid for you now in case you're over the age of 55, and your contribution total should remain under 5 lakhs. Only then you can consider NPS. Otherwise, my stance on NPS is still the same. It is not worthwhile to invest in, unless this scenario. Now, we also spoke about silver versus gold, which is a better precious metal to invest in. We realize that silver is more volatile, better, but there is no current financial instrument. Although SEBI is now going to very likely approve a ETF of silver as well. The moment that happens, we also will be buying silver ETFs along with gold ETFs as well. So I'm really looking forward to, these are the two things I'm really looking forward to happening once the foreign stock IFSC thing opening up, so we can invest in US stocks. The research, all of this we're going to do. And the second is silver ETFs. These are two instruments we wanted, but we did not have the comfort or the safety or security of doing it. Then we also spoke about all the different strategies that Trendlines has. We shared an entire diagram of how we invest in equity, debt, gold, and alternatives. In equity, we had indexes and stocks. In debt, we had four different categories actually. We spoke about different methods of investing in gold and other alternates as well. Then finally, one of the last few things we discussed was what were arbitrage funds, the risk returns, taxes, and the on the time parameter. So I won't go in detail in this. Would request you to go through the last session. And then finally, we spoke about how you can create a portfolio of ETFs just by using a single click. Again, something you can go through in the last Alumni's recording. So with all of this shared in the last time, we have lots more to share with you today as well. So let's start with today's class. Are you ready to get started with today's class? Guys, are you ready? Yes, no? Are you there? Are you ready? कमेंट नहीं करोगे तो कैसे पता लगेगा? I can't read your mind. तो कमेंट तो करना पड़ेगा. Yes? All right, superb, superb. So the first thing I want to start with is one of the most interesting things that we have also learned recently. And what is that? That is investing into MLD. So what is MLD? Market linked debenture. So what is a market linked debenture? How is it different from other debentures? So a debenture could be listed or unlisted. The moment it gets listed, it becomes a market linked debenture. So how can you make up to 11% guaranteed returns from this is the option that I'm going to share with you next. This is an option that we have shared and floated with you as well. But now I'm going to go in more detail and share with you how you can actually go into the implementation of this. So the option that I'm talking about is a NBFC called Dhanvarsha Finvest. They are giving 11% returns. The asset will mature in December 2022. So this is almost October, November, December, 3 months and 1 year, 2022. So that's 15 months. So we've already discussed in the last few classes that when you're going into debt, which one is safer, short term or long term? Do you remember the answer? When you give your money to someone, even a person or a corporate or the government, where are you more secured, short term or long term? Short term or long term? Guys, answer to batao, short term or long term? When you're investing in giving your money to someone, would you rather have it for short term or long term? Short term, right? Because the probability of default is less. So this has just 15 months of investment period, which is very good. The minimum amount in this is high, obviously, because this is a very special option where the minimum amount is 10 lakh rupees. This is also in lines of a few unsecured NCDs or um, perpetual bonds that we've shared with you in the past. So this is comparable to that, at least from the amount perspective. But the maturity size is very small. So it's on the other end of the contrast, at least on the timeline. The good thing about it is that the tax is flat at 10% if you invest in it for more than 12 months. So why is that the case? So whatever tax bracket you have, 40%, 30%, 20%, 10%, 0%. सो 0% को तो 0% ही देना पड़ेगा, 10% एंड अबव को 10% ही देना पड़ेगा. ऐसा क्यों होगा? बिकॉज यू विल एक्चुअली बी investing in a listed debenture. Listed debenture may, in this particular debenture, it will not give you any cash flow. The value of the bond will keep on going up. So 100 rupees bond will become 111 after 12 months. So this means that on 111, you still haven't received the money back. This, the price of the bond has gone up. So when you sell this bond, or when the bond matures, or rather when you sell this bond before the maturity, you will receive 111 rupees in the form of 11 rupees will come in the form of capital gain. So on long term capital gain on listed bonds, you only have to pay a 10% flat tax. So our idea of investing in this would be investing now, and we will exit in about 13 to 14 months out of this before the maturity. Because if you hold till maturity and you receive the money, then you'll be taxed as per your tax slab. But if you sell the bond before the maturity and you've booked a capital gain into this, then you're taxed 10% into the capital gain. So now let's talk about exactly what is this option, what is the security, so on and so forth. Very correctly asked, Shivlatji. So that's what we're going to discuss now. Why is it that we're discussing? And you'll be very surprised when I tell you that this is a triple B rated company. Even then, we're suggesting you that you can consider this option. Why? Now let's talk about that. So this is an option that has come under Vint Wealth, which is, you can say, a company who's enabling this. So Vint Wealth, what they're doing is, and I want you to understand this. First, let's read through the fine text, and then I'll tell you the system that they have created. So they have created the covered market-linked bond. Why is it covered? Because it's asset-backed, so it's secured. In fact, more than secured from that perspective. It's a market-linked debenture issued by the partner NBFC Dhanvarsha. So there's Vint Wealth and NBFC Dhanvarsha have partnered to make this happen. It's tax-efficient product where you have to pay according to long-term capital gain, maximum 10% on interest if you hold the investment for more than 12 months. The same thing that I told you. This asset has an underlying cover pool of gold and property loan. This is why it's covered now. This has an underlying pool of gold and property where gold is 15 crores, property is 4 crores, which is minimum 125% of the amount that they are raising. How much are they raising? Only 15 crores. Minimum investment 10 lakhs. Interest payment is on maturity. Now, the cover pool for this is 19 crores. So 19 crores is the asset that they have against the raising money of 15 crores. The total collateral market value is about 41 crores. Now, what is the collateral type? In the form of gold and property. So the good thing is कि जितना पैसा ये raise कर रहे हैं उतना पैसा gold के form में है. So gold does not have the same issue of liquidation like property does, which is the good part about it. The only concern would be if gold price crash, then that could raise a problem. And with the same thing, the company also defaults and gold also falls. Only then this could be a concern until the point the property is liquidated. So I don't feel key in terms of security, they've made enough provisions. Generally, NPAs are no more than 10-15%. So उस हिसाब से they have 125% of asset, which is not something to be worried about. So the whole thing is, this is how they've plotted it, which is not something I would agree with, but partially I can agree with it. They're saying in terms of risk and returns, their returns are higher than debt mutual funds, but less than bonds. Uh, Sorry, the risk is less than bonds but higher than debt mutual funds. I would probably put the risk factor between bonds and stocks. That's one thing. The returns, I'm in agreement. The returns are definitely higher than bonds. So the return factor is fine. The risk factor is maybe between the bond and the stock. That would be the ideal place. If I was to plot it, I would plot it somewhere here. So the returns will be the same, but the risk will be a little higher. Are you able to see what I'm drawing, by the way? Haven't used this tool before. Are you all able to see? Yeah? Okay. All right. So that's where I would ideally plot it, which is why it's a higher risk and a higher return investment. But the risk is well maintained. Why? Because they have enough assets to cover it. That's the whole idea, which is why we said that you can consider investing in it. If you're a high risk investor, for short term, you want to invest your money, this seems like a very interesting proposition. Okay. So this is that option. Why and how are they doing it? So what Vint Wealth does is they have created a NBFC, not a NBFC, they've created a special purpose vehicle, which means that NBFC Dhanvarsha, they are in the business of loans, right? Obviously, it's a non-banking financial company. That's how they make their money. They created another special purpose vehicle for the Dhanvarsha Finvest, where they took out assets out of Dhanvarsha Finvest and they added it in that. This is how it becomes covered for defaults. This is why the assets are now separated from the main NBFC. Then from this SPV, they are raising this loan of 15 crores, where they are giving a high rate of interest. So typically, NBFC Dhanvarsha would be making 15-16% from the loans that they are giving, and from that, 11% is what they're going to be given to you. So can it be sold easily before maturity? So this is something that we will be doing on our end. Else we will be investing from an account where we will ensure that आपका 10% tax ही लगे in case you want to go for it. Okay. And sold तो बात की बात है, अभी तो इसको buy करना is going to be a task because uh, on the day, I'm sure all of you got that message when we shared it with you, it was only available for a few hours on a certain day, because who would want to let go of an opportunity to make 11% secured 10% taxed income for 15 months? I wouldn't want to lose that opportunity. So it's very hard to buy it. Selling would be easy. I think buying will be very difficult. That's what I would see from here. And this is a very limited opportunity. So the whole idea is, if it comes again, you should be thinking of just jumping on it the moment it comes. So if the reason why we got into so much detail is, one, because this is a new method of investing. Abhi tak covered market linked debentures is something we never discussed about. This is the first time. We also spoke about the method of using a SPV to raise loans is also something we haven't done before or discussed before. So this is a new age way of raising loans, especially in a time when the debt markets are, you can say, most uncertain. Why do I say they're most uncertain? Because if you think of it like that, um, debt markets in an economy like we're living in are most fragile. So इस time पर having the security of your capital is most important than the return of your capital. So इस time पे अगर आपको security के साथ 11% return मिलता है, that's pretty neat from my perspective. So this is all about uh, the opportunity of investing here. So now let's move further. Now let's talk about the next thing, is the surest way of becoming wealthy. So this is not a skill, but this is a mindset thing I wanted to share with you. So the whole thing is, when do we feel wealthy? When we have ample of money with us, isn't it so? When I have more money than I need, I would feel wealthy because I feel fulfilled. Isn't this the standard mindset that we all have? But it's come to that, I've come to that realization and understanding, and it's not just mine, this is acquired from the biggest people in the world when it comes to the psychology of money, when it comes to understanding how really money is made or how the wealthy mindset is created, is the difference between having, doing, and being versus being, doing, and having. So I'll explain the difference. If today I want to feel wealthy, I want to have the wealthy mindset, I want to think like how the wealthy does, the first thing I would need is have as much money as they have. Once I have as much money as they have, the next thing is I would want to do the same things that they do now, because it has now seeped into me that yes, this money is mine. The next thing would be is I would now be, I'll think, act, walk, talk like the wealthy people. Isn't this something that we've seen that happens? Would you agree with me? ऐसे ही होता है, हमारा our mind is thinking like this only. We can't think like a billionaire until we become one. True, guys, true. Would you agree with me that we cannot have the same mindset as that of the wealthiest people unless we also become on the same page as them? Agree, not agree? Agree, not agree? अब comments में ही बता सकते हो, और तो कहीं बता नहीं पाओगे. Yes, true. So here is the thing. I want to change that thing now. So let's turn the table. Let's turn the table and say, what if we be the wealthy here? Then do what the wealthy does. We naturally will have what the wealthy will have. Isn't it the reason why the people who are wealthy get more opportunities? They have better uh, opportunities with them. They make more money. Why is that the case? Because they're already wealthy in their mind, right? And absolutely said, correctly said, Manus, it's manifestation. So all we need to do is change the way this one operates, and everything else automatically happens. And how is that possible? Once we not wait to have what we have, then do what the wealthy does to actually be wealthy, but the complete opposite, to start being wealthy in the mind, then doing what the wealthy does to have what the wealthy has. अब बहुत इजीली मैंने आपको ये बात कह दी, लेकिन होगा कैसे? बिफोर आई टेल यू ये होगा कैसे, यू विल बी वेरी सरप्राइज्ड टू हेयर अ केस स्टडी. सो इन कौन बनेगा करोड़पति 13, if I'm not wrong, there was this guy Sushil Kumar, if I haven't got the name wrong. He won 5 crore rupees. So now he had what the wealthy had. Yes, he had, but he could still not do what the wealthy does. So he could not be the wealthy because after 5 years he filed for bankruptcy. So if this was his financial status, he moved here and after that he came here. Can you believe that? And this is not just for Sushil Kumar. This is a phenomenon we've seen in absolutely so many of the American people who are one time billionaire, and the next thing you know is that they have become bankrupt. And we've seen, Nicolas Cage, if you've heard about the actor, he has been bankrupt. 50 Cents is the rapper, he became bankrupt. So many other people who made a lot of money, millions of dollars, and then lost it all. Why? Even Michael Jackson had the same thing. He died in, I think, 500 million debt or something like that. That's crazy. Having so much money but not being wealthy in the mind would eventually result to the same state or worse state that you started in. So how can you adopt that mindset is the first thing we need to do. Is the three things that I follow for myself. First is the belief system, that irrespective what I have, I am something more than that. If I have 10 lakhs in the bank, but I am a 10 crore worth person, that is how I need to start thinking. If I have 10 crores worth, I need to think I have 100 crores worth in my mind. So this is the belief system that you have to make yourself, not just say, but actually believe it. And that belief is strengthened with affirmations. How you every morning, every time of the day, when you speak, when you do what you do, it has to be a part of you. So you have to do it, say it, keep on doing that. The third thing is having a vision board. How many of you have a vision board, by the way? Does any of you have a vision board in your office, in your home? Yes, Manu, I bet, will have. Yes. Anyone else? If not, this is a very major thing that you're missing. This is probably why the things that you want will likely not become a reality, because you're not visually seeing it all the time. So my vision board is right here. If you can't see it on this though, but it's right here. All the things that I want in my personal life, in my spiritual life, in my physical life, in my health, everything that I want is very clearly defined and written here. That's the first thing. In fact, when I enter my office, I look at my vision board first, then I start my day. So it's absolute importance. So enough we've spoken about the mindset. Now let's go back into certain skills. A lot of queries come to me when people say, Arpit, I just have this money for just 1 year or so. Should I park it into an NCD? Should I buy gold from it because you're asking to buy gold? Should I keep the money in my bank in the FDs? What should I do with it? So we'll be looking at the three different options for shorter term investments, which are typically minimum 1 year to going up to 2 years. Okay. So this is exactly what we can do and how we can do. Okay. So what are these options? So we'll compare FD versus corporate FDs versus short-term FDs on a parameter of 1 to 2 years. Then using risk, return and liquidity as three parameters. In fact, even taxation. Although taxation तीनों पे almost same ही होगा. One provision of short-term bonds will reduce your taxation. We'll talk about that too. Start with standard FDs. When you talk about FDs, what is the highest rate of interest that you can get? I think 5 point few percent, 5.5 ज़्यादा से ज़्यादा when you keep your money in a bank FD for 1 year or so. Yes, right. अगर अभी let's forget the tax, अगर total gross लेके चलें, अगर हम total gross लेके चलें तो 5.5 से ऊपर नहीं है. Certain banks like what's the name, Equitas, have up to 7% returns on even savings account, FD भी छोड़ो. So the FD is equal to savings is equal to 7% for a deposit of more than 1 lakh. But the problem is it's a small bank. So any investment more than 5 lakhs and the bank defaults, you've lost the money. So you can go up to 5 lakhs of investing in bank FDs. Right now, that is the best option available, at least for less than 1 year, right? Or you can take it up to 2 years if you would like. That's the best option there. The best safety we're getting. So risk is 5 lakhs se upar. There's a chance of default if you go for high returns. If you go for low returns and safe banks like HDFC, ICICI, then you get 5.1, 5.2, 5.5 at best. Then comes the returns, which we've already discussed. Then comes liquidity. It's absolutely there. This is the most preferred option for short-term investments for people. Next comes corporate FDs. So, how are corporate FDs different from bank FDs in terms of risk? These are unsecured. So, in case the company fails to pay their debt obligations, you will not receive the money. That's one. So, risk of corporate FD is probably the highest amongst all three categories because there is no secured, there is no security if you'll definitely get the money back or not, irrespective whatever amount you invest. Second thing is the return. So returns are slightly higher in corporate FD. So I'm going to show you a case, a real case here. So we requested to see these corporate FDs from Globe Capital itself. They send us this report. And we saw for 1 year, 1 to 2 years, the returns are about 5.65 to 6.1% if you invest in Bajaj Finance, which is obviously better than what you're getting in your bank. If you look at another high options, 5.75 in HDFC, this is up to 2 crores for HUF and trust. For individuals, I think it's 5.5% up to 2 crores, 5.55. The highest ones that I saw for up to 2 years is Shriram Transport Finance Unnati scheme, but this is for over 5 crores. For less than 5 crores is 7.5%. Oh, sorry, 6.75% for up to 2 years. So these are options again available, rated F triple A and MAA plus by CRISIL and ICRA. So these are options one can consider. That's one way of doing it, but it comes with the possibility of investing in unsecured, which is not a very comfortable thing for most investors. But if you're very sure of the company, you've gone through their financials, typically what we have seen right now, we're convinced with Bajaj Finance. So if you want to invest here for for up to 2 years, you can consider this option, which is a compulsory FD. The thing about that is that we've only found two companies which were where I would also put my money in, and they were HDFC and Bajaj Finance. That's it. So if you look at the perspective that we have seen, maybe 6.1% is the highest return, or the second option is 5.55. These are the two companies we are convinced that you can still park your money in a corporate FD despite no security, because the financials of the companies are absolutely very strong and it's not a very long commitment of FD as well. So This is another option you can do. You can park your money in corporate FDs. Now comes the third option. The third option is my favorite because we are talking about short term bonds. So, when we speak about short term bonds, how many of you remember the opportunity of investing in IIFL? Any of you remember? We'll be discussing IIFL again one more time. But do any of you remember we invested in IIFL? This was somewhere, I think, 2 to 3 months ago. And we bought a lot of IIFL bonds, and they were giving about between 9 to 10% um YTN. So this was a special bond that we found, which was secured as well, and also giving a very high rate of interest. But that's a very special scenario. अगर आप normal scenario में लेके चलते हो, somewhere between 6.5 to 7% is what you can make in 15-month bonds as well. If you look at a normal scenario, so the good thing is if you invest, let's take a normal scenario only. अगर हम short term bonds में invest करते हैं, little over 1 year, so your returns, your risk is, it's a secured bond, so risk is fully covered. Second thing, returns are higher than FD, at least 1 to 1.5% higher. And the liquidity of this bond, the only thing is now if you're investing for a 15-month bond, you have to stay invested till the very end, because if you exit early, you might not get the same return that was promised to you on maturity. So your 6.5 might turn into 5.75 as well. Because it's a fixed term, short term, you can invest your FD money for you, something that you need for sure, you know for sure you need this money, and you don't want to take capital risk, and you don't want to put this into speculative investments as well. This is one of the best places to invest in. The short term bonds can be invested in shorter term debt instruments. So this is the third opportunity. So ideally, short-term bonds, if not corporate FDs, then last option, go for 7% in banks like Equitas. However, in terms of taxation for all these three, if you go for short-term bonds, now this is the last aspect where you can optimize your taxes. The same opportunity I shared with you in MLD, if you invest in maturity bonds for 15, 16 months or so, more than 12 months, then your taxation will also fall down to 10%. Because in bank FD and corporate FDs, you'll have to pay tax as per your tax slab. So this way you can reduce your tax liabilities as well. So if you're looking to park this money, you can speak to the team and they can help you find, because we'll have to research on these opportunities for you. But they can be found in the region of 6.5 to close to 7%. All right. So now let's talk about a very, very interesting topic. Where is the FPIF parking their money? Who is FPI? Foreign portfolio investors. And this is very interesting because this is exactly what they're doing. They actually have been parking their money. So this is the net investment into debt by the foreign portfolio investors. In the past few sessions, I think couple of months ago, we shared with you how the foreign portfolios are taking money out of equity. I think we saw that in the month of July and August. But what are they doing with that money? This is what they're doing with that money. They are taking out money. They have been consistently withdrawing money from the debt markets. But August onwards, they have started investing majorly into the debt markets, exactly what we guys have been doing as well for almost this entire year. So the whole idea is that debt markets is where the real money is now shifting towards, something we already have been doing. And what is the outcome of this? So, if more people want to buy debt or the bonds, which means the bond prices will go up. And if the price of the bond goes up because the demand is up, the bond yield will come down, which means if you have been seeing that we are quoting a 8% return plus on many of our bonds, in the future, it is very likely that 8% will slowly become close to less than 8%, with somewhere in the region of 7.75 to 8%. That is the likely outcome that is going to happen now. So, in case you are sitting on thinking of investing in debt, this maybe is the time, because after this, I will be also showing you some real case studies that the returns of debt are slowly going to decrease as well. How so? We will discuss it at the very end of today's program. So, next is another question that I get asked, Arpit, how can I make passive income from equity investments? Because equity is all about growth. How can you make passive income out of this? But that's also possible. How do we do that is what I'm going to share with you now. So there are three simple ways of doing this. The first way is dividend via stocks. So when you invest into a stock, it pays you dividend until today. No, not rather until today, until the decision that was made by the finance ministry that dividend income will be tax free. This was a great option because you could buy companies like Indian Oil Corporation, who pays almost 10% dividend. So you can make 10% fixed returns on a stock which is a PSU owned, and hopefully the price, even if the price of the stock remains where it is, you made 10% fixed income. Price of the stock goes up, great, you made more money. Price of the stock goes down, at least 10% का cover तो है आपके पास. Now the problem is this 10% of whatever dividend income you will receive is fully taxable as per your tax slab. So this is not lucrative anymore as it was in the past. Another thing about that is when you receive, if you buy a stock for 100 rupees and they pay 10% dividend, if the price of the stock goes to 110 and the dividend is paid of 10 rupees, the price of the stock will come back to 100. So the only income that you made will be in the form of dividend, and dividend will be fully taxed. On the contrary, if the company was not paying you any dividend and you sell the stock after 1 year, then up to 1 lakh rupees, you don't have to pay any tax on that as per long term capital gains in equity. So if it was better for you if the company was not paying any dividend and you book the dividend as a profit for yourself, or you book the capital gain as a profit for yourself, this way you don't have to pay any taxes on this. So dividends have become inefficient, which was the most efficient thing in the stock markets, is now the absolute opposite of this. Did you guys get this concept? Can you tell me a yes or no? Because uh, understanding this concept would definitely mean saving taxes for you. Explain again. Okay. आपने 100 रुपीज का स्टॉक लिया, 100 रुपीज का स्टॉक becomes 110. ठीक है. अब now we have two cases. One case, the company pays dividend, which means 10 rupees paid in dividend, the price of the stock will come back to 100 rupees the next day, because 10 rupees is paid out from the रिजर्व्स ऑफ द कंपनी. डिविडेंड कहाँ से आता है? प्रॉफिट से ही तो आता है, कंपनी के रिजर्व से आता है. तो अगर उसने आपको वो रिजर्व दे दिया तो उसकी एंटरप्राइज वैल्यू कम हो गई, उसके रिजर्व्स कम हो गए, तो स्टॉक प्राइस भी नीचे आ जाएगा. विद द सेम अमाउंट, से 10 रुपीज पर डिविडेंड इज पेड आउट, तो 10 रुपीज will be reduced from the price of the stock. This dividend that you receive, you have to pay tax as per your tax slab. In the past, this was tax free. It was great for you. You don't have to do anything. Company will keep on paying you dividend and it's tax free. Amazing. Now, company pays you dividend, you have to pay full tax as per your tax slab. On the contrary, as of today, if a company, you invest in 100 rupees, company becomes 110, and now you manually sell 10 rupees worth of share after 1 year, which means what? That long-term capital gains in equity after 1 year are taxed at 10%. But this 10% starts after the first 1 lakh of capital gains that you have made. Or that first 1 lakh is absolutely tax free. Now think. In second scenario, you're making tax free income at least for up to 1 lakh. In the first scenario, you're paying tax as per your tax slab. So now dividend via stock is an inefficient way of creating passive income from equity. Ideally, you should look at capital gains and trying to book it yourself. Even if you don't wait for 1 year and you come in short term capital gains, that is also 15%. And most of you are likely in 20 or 30% more tax. So आपका tax वैसे भी कम है. If you wait for more than 1 year, even then you pay maximum 10% tax, even then you're better off. So dividend via stocks is now, you can call it a dead way of making passive income, because it's fully taxable. Unless you are investing from that account जिसमें कोई tax लगता नहीं है, which is in the 0% tax slab, only then you are on the same page. So this is another thing we have to take into the strategy of investing, especially from the file from which we're going to invest into stocks. Although this is not something we're discussing at much length because this is not the time to invest in stocks, as per us at least. So this will come into the strategy and play when the market's correct, and then we would ask you to start investing in stocks. When that happens, that's when the decision of कौन से file से invest करना है will be a major play. The other method which most of the other people use, this is mostly used through mutual funds, is known as systematic transfer plan. So systematic transfer plan क्या होता है? That you invest through in a mutual fund and then systematically the money, systematic withdrawal भी कहते हैं, SWP, it's known as SWP as well, where you systematically withdraw the money from your equity investments back into your account. So let's say systematic withdrawal plan will say कि 2 years before the maturity or 2 years before certain time, you will start slowly receiving all the money back. Now this is also great, but इसका सबसे बड़ा flaw क्या है? It is that your withdrawal should be on the basis of valuation, not on the basis of time or automation. What does that mean? When I say withdrawal should be on the basis of valuation, means you cash out from something which you feel now is more than its worth. You sell something which you believe that now the price should not likely rise. So when you are investing in stocks, and as per the strategy that we follow, we buy companies which are at discounted prices. And then we sell them when they come to their fair value. Uske baad wo upar jaye, niche jaye, we don't even look at it. Here the decision is made on the basis of valuation. And that profit that you receive is in the form of cash. This is now your passive income. Because you bought a stock at 100, you sold it at 125. 25 rupees gain is now sitting in your bank. If you reinvest this 100 rupees, great. If you don't, then 125 is sitting in your account. So you are able to realize the profit as passive income for yourself. And you can withdraw this 25 as well if you would like. This is the third method that we follow, the profit only strategy, that you invest, only keep on withdrawing your profits if you don't want to use compounding. If you want to use compounding, obviously you'll reinvest that money. But agar passive income chahiye from equity, then you withdraw your profits consistently from the equity markets. This mostly will be in the format of the stock investment portfolios. So the whole idea here is that if you go for systematic withdrawal, you're withdrawing your capital as well. So अगर आपका portfolio ने return नहीं दिया तो वो आपका capital withdraw करके आपको देना शुरू कर देगा, which is potentially booking a loss and withdrawing your money. Even if you made a profit, even then you're not sure if this is the best time to exit or not. So systematic withdrawal plan does not take into account the valuation. It only takes into account the time and the system of doing it, which is system is good, but without valuation is just a system which works without any surety of gains. So the third method is the preferential method, where you invest into a stock strategy. You book your profits consistently every now and then, and you're able to withdraw the profits, let's say on a quarter or yearly basis. So you know for sure, मैंने 10 लाख लगाए, 10 के 12 लाख हुए, 2 लाख रुपए मैंने निकाल लिए. This is my passive income this year. So on and so forth. At least 1 lakh rupees passive income per file you can create without paying any taxes to the government. Why not use that? So this is exactly how the approach should be of creating passive income from your equity investments. Now let's move to a very big thing, is how do market and economic crashes make rich people richer and poor people poorer? And what kind of things should we do to be able to become a part of it? So I'm going to give you 7 steps. These are some mental and some physical that you have to take into account. When the market crash, you should be doing all of these. So I hope you're ready to learn this, because here it goes. So the first method that I'm talking about is having spare money to invest in a crash. See, market crash aa jaye and you don't have more money to invest means you have lost a once a 5-year opportunity. Typically, market crashes are on an average of 5 years. Every 5, 6, 7 years, you see one market crash always happening. So we looked at one in 2020, before that was in 2013, before that was in 2008, before that was in 2000. Before that was in 1994. So it's a very clear pattern of whenever markets fall more than 30%, you can call it a crash. And every crash, if you would see in the past, has come in the 5, 6, 7 years range. So the whole idea is that you can spare. How do will you invest when you don't have money in the crash? So you have to have some spare money kept aside. Now, how do you keep this money spare? By keeping your money agile. Should you keep your money in FDs for 5, 6 years? No, you can buy this money into those assets. One which does contrary to what equity market does. Gold is one place. Market is going down, gold is going up. That's one way. Second thing is when you're investing in the bonds as well, this is also something that is agile. You can move out of a debt instrument and invest in equity. So this is also that creates agility. Property and insurances are two assets where your money gets locked away. So मार्केट आया नीचे आया आप सेल ही नहीं कर पाओगे तब तक ना अपनी इंश्योरेंस ना अपनी प्रॉपर्टी योर यू हैव मनी बट यू डोंट हैव एनी एजिलिटी. So you've lost the opportunity. Now you wait another 6, 7 years. And these opportunities can make money for you like that. We've seen last year we made more than 100% return before we exited. Before that, we did this activity in 2016, uh, where we made, I think, about 30, 40% returns in the next 3 or 4 months of investment. So these opportunities will keep on coming, but are you ready with spare cash money, with good cash flow, or assets which can be sold and bought into this? Is the big question. The third is the big one: removing mental blocks. Because all the time we are thinking, oh, abhi to market और नीचे जाएगी, and we keep on speculating on it. So these blocks that we create in our mind become the very reason that we are not able to take action on this. So you have to be very mentally prepared even before the crash to invest in a crash. That is the easiest way to remove your mental blocks. Then comes holding on to very long term investments. Most of the people end up selling what they have. So we should do exact opposite. We should not be selling our very long term investments. We should hold on to them, especially in a crash. And then if we feel that we are not getting the right guidance, obviously speak to an expert. In our case, I am anyways with you to guide you through all the questions that you have. Sixth is do not panic. Because in a time of panic, the only thing you have to do is not panic because everyone else is already doing it. What you need to do is the exact opposite: be in confidence. Remember that quote of Warren Buffett: be fearful when others are greedy, be greedy when others are fearful. So, right now, we are fearful when everyone is greedy, which is why we are asking you to do what we are doing. While on the other end, when the markets go down, we become greedy because everyone else is fearful. That is the simplest way of saying it, hardest way of doing it. Oh, but it's easy when you have the right guidance and support. And most importantly, it's easy when you are predetermined to do this. What you've already calculated you're going to do at a certain point, when that point comes, it's very easy to do it because one, you've already calculated what you're going to do. Second, you have the right guidance. Third thing, and the last thing is, you simply have to take action. Do not procrastinate. Do not become a super planner, but become an action taker. So these are the 7 things, the step by step methods that one can use to ensure that they are able to use, and you are also able to use the next big market or economic crash. Whenever that happens, you are able to increase your wealth, not decrease or stay stagnated, because these are opportunities to make more money. These are not threats. These are great opportunities. So use opportunity every single time it comes your way. So now is I'm going to come to the one of the most important sections of today's class, and that is what is Evergrande crisis and how it affects us. So Evergrande happens to be a company which is the second biggest builder in China. And I don't know if you know this already, but in China, not just from now, for many years, they are absolutely very bullish on the real estate market. In fact, they're so bullish and they've done so much construction that they have something known as ghost towns. When I say ghost, means bhoot, ghost towns, because they've built so many towns where no one lives. and people keep on buying that real estate. Can you believe that? China is full of many towns where no one lives. People just own that property or builders have built it, but no one lives there. No one, which is why it's called a ghost town. So, the second biggest builder in China has now defaulted on their debt payments. So, like India, you have the same method happening in China. People either raise money from equity or debt. When they raise money from equity, that is when they go for an IPO. The price of Evergrande stock moved from 50 rupees, $50 per share to less than $5 a share. So they've already lost 90% of this value. I'm talking about the second biggest builder of India. So something on the lines of, you would see the biggest builders in India. Imagine if someone does that. We have already seen that happening once with DLF in the past. JP Associates was one of them. A similar thing is happening in China now. But this, the quantum of the size of this company is really big because they defaulted on one of their debts this week itself, which was due on Thursday. And today is Saturday. So they have defaulted on the first debt, means they don't have enough money. But why is it? Why did this scenario happen? Because in August 2020, China being a communist country, they can control the rules of banking and finance very easily. They curbed the money that the builders can borrow in loans, because builders mostly work on borrowed money. They don't have, not all the money that they have is their own. They are mostly on borrowed money. Apparently, Evergrande was termed as one of the highest leveraged builder in the world. So China did not, the Chinese government did not like that. They changed the rules, and on a certain parameter, certain threshold, they said कि इसके ऊपर आप debt raise कर ही नहीं सकते. Evergrande became that company. That they had already crossed that threshold. They were already over leveraged. Now what they did, they started selling because they realized now they can't borrow more money, so they need more money. They started selling their properties at as much as a 52% discount. This raised a lot of concern in the real estate market in China. Why is someone selling their property which is worth 100 rupees at 48 rupees? Which some people bought this property and others started questioning about it. And only now we've come to that point where we realize that they don't have more money. They can't raise more money. The stock price is already going down because of the obligation of not being able to pay their debt, which means they also cannot raise more money through the through the additional shares in the financial market because no one has the confidence. So they can't raise money from equity. They can't raise money from debt. They are not able to sell their property. अब पैसा कहाँ से आएगा? So the only possibility is that if the Chinese government would bail them off. So is that going to happen or not? We'll deliberate it in a minute. But to tell you the quantum of this, the debt of Evergrande is 2% of China's GDP, which is about somewhere upwards of 300 billion, not million, billion dollars. That is the quantum that we're talking about. A lot of people have termed this as the Lehman Brothers crisis that happened in the year 2008, which caused the 2008 crisis. They're calling it the Lehman crisis of China. So the question really is, what are the possible outcomes of this? The first is a commodity crash, which means the demand of construction related commodities like steel, cement, and others will likely go down because this company will not be able to um, build more properties for sure. And is it just this only this company? Because this company is connected to the entire GDP and the economy of China. Because Evergrande is not just, understand, Evergrande is not just a real estate developer. They also have electronic vehicles. They also have a wealth management business. And they have about 170 banks who they have borrowed money from, and they have lakhs of people. They have 1,300 projects in 200 plus cities. Can you imagine all the people who had invested in their projects? Now they would have taken a loan to buy this property, This property is now gone. They won't be able to build it. This will be defaulted. Their loan will still be running. So this will have a ripple effect in the economy of China, which will likely cause at least in China, can possibly cause a equity crash. Why is it that they have already defaulted on Thursday, but it's still not happening in India or foreign economies? Because they are given a 30 days grace period before it's officially called default, after the coupon payment or the interest payment. This interest date payment was last Thursday. We are 3 days into it, and we are not seeing any much effect on the equity markets. They are still keep on going up. But after the next 27 days, if they're officially discarded as not being able to pay their defaults, then they will go into likely bankruptcy. The moment it goes into bankruptcy, then the ripple will start falling one after another. So I certainly believe that equity crash, at least in China, will happen. It might not be as, definitely not as big as Lehman Brothers, because in 2008 the US markets are more intertwined with the entire banking financial system in the world. China is more consolidated and reserved to themselves. I'm not saying it will not affect it, but it will not, definitely will not be as big as Lehman Brothers. Personally, I hope it becomes that, but I don't think. My logical sense does not say this is as big as the Lehman Brothers crisis. But China ka Lehman Brothers to ye for sure hai. Even Uday Kotak has said that, who is the head of Kotak Bank. Now, the third thing is the possibility, will they be bailed out by the Chinese government? The expectation is no. The fourth effect is that, will it have a minor effect or no effect on us? I believe that I don't want to put this word, but I should address this. I do believe कि अगर चाइना में मेजर क्रैश होता है तो इंडिया में भी मेजर क्रैश होगा, बिकॉज द स्टॉक मार्केट्स आर जस्ट लुकिंग फॉर अ रीजन टू करेक्ट. और इस टाइम पे there are a lot of buying volumes by retail investors, and this can become an ideal trap. You'll be very surprised to see the effect of this on the price of REITs. Has any of you seen the correction in REIT prices? Because वहाँ पे तो effect आ चुका है already. The kind of effect that we wanted to see is already happened there. So if I was to take you on my screen and if I was to show you what has happened in the REIT space because of this, here is what it is. So Embassy being the primary REIT that we are uh, tracking over this period, have a look at what has happened there. So the price of Embassy REIT was at 380 rupees at the time when this thing actually opened up. And as this chart loads, I will show you what has happened to the price of REITs after that. So housing market pay, it is definitely going to have an effect, especially and then commodities market pay, I'm also very sure this is going to have an effect. The only thing we are not sure of is कि अभी तक equity में क्या effect आएगा इसका, because that is the bottom line that we also want to see. So I guess this is taking a little longer to load. We can check this here. Embassy REIT share price. So the current REIT is at 333 rupees. Only 5 days ago, it was at 345. 1 month ago, it was at 375. So it has already fallen about 5% from their peaks. So this whole fall has happened in the last 2 weeks itself. 333 was the launch price, almost close to the launch price when the REIT was launched in 2019, if I'm not wrong, almost 2 years ago. Yeah, there we go. So it started at 328. 2 saal baad, it's back to where it started. So the only thing that has happened here is not really any capital gain unless you have entered and exited from this. The only gain that has happened has come in the form of dividend yields, which is at 6.38 right now. So still lucrative, but we expect if this thing, and here is now where I'm going to tie two different things. If the Evergrande crisis becomes bigger in China, I believe that at least, if not the equity markets, for sure, the effect of that on the real